Joey. Can Palantir trade north of $120 by the end of 2030? Is it realistic? Is it probable? Let's find out. Let's run the numbers. Let's see what needs to happen. And let me preface that with a little bit kind of like a disclaimer or theoretical approach, philosophy about investing. And so, this video is for someone who's a long-term investor, right? Investing in a quality companies and going for that, not for the breadcrumbs, but for the loaf of bread, right? You shouldn't really be satisfied by, getting 10, 15% here and there, getting some quick wins, getting extra 100, 200 bucks, extra 1,000 here and there. No. Let's a little bit, be nice, patient, and let's go for the big prize, right? Let's be patient, invest nice and reliable quality companies and get those, 5x, 10x, hopefully more by the, some reasonable timeline, right? 5, 10, 15 years, right? So let's go for the big price. And that has been my approach in investing for the past basically 70 years. Worked out quite well with a couple of great companies, for example, with Tesla, and basically allowed me to, grow my net worth to a little over $500,000 recently. And now I've basically applying the same principles for Palantir, right? So $120, which means roughly, 8, 9, 9x from this point. Let's see how this can happen. So let's dive into it. Carp, Thiel, those are two brilliant guys. And I think I feel quite comfortable having them at the helm of the company I own. Management team is always quite an important point when I'm evaluating companies. But for the long-term investor, it's important to realize that investing is half art, half science, right? Sometimes people make the mistake that they just invest, into the companies based on the stories and completely ignore the valuations and what might happen, like back in 21, they just, buy something for insane valuation and now the stock is down, 60, 70, 80%. That's one type of mistake. The other type of mistakes when you go a little bit too hardcore science, Wall Street financial analyst, you do like the, super hardcore DCF. And, if you do a DCF for some of those groundbreaking companies, like let's say if you would do a DCF for Tesla back in 2018, you would have missed the boat, right? So that sweet spot is somewhere in between, right? Realize that the valuations matter, but at the same time put maybe a little bit more emphasis on the actual product, the quality of the management team. And let's apply that for Palantir then. So basically, in order to get to a certain level of clarity for 2030, which, that's 7 years out, that's relatively far out. And the farther out in the future, the greater the variance of the possible outcome. So we have to find out what we can expect in revenue, first and foremost. And as of this year, Palantir expects approximately 2.2 billion in revenue, which comes from 391 clients as per their Q1 23 numbers. And that means that the Palantir currently extracts about 5.7 million per client, right? That's kind of the average across the board. The small clients, the huge clients, and everything in between. And their top 20 clients are now paying about 53 millions at the moment. So, Palantir has a couple of those really big companies that are where Palantir is already embedded inside, producing a massive results, which of course then, translate into that massive paycheck that Palantir gets, right? Because, okay, if you are actually a CEO or CFO and want to pay Palantir, 53 million, that's quite a hefty bill, right? So for that, you probably need quite a lot of value to get from Palantir. At least I would imagine, 5x, 10x of value, right? So thanks to all of the, simplification and work with data and everything. So when we run the numbers, all the way to 2030, lots of these clients that are now just a smaller clients, starting with Palantir, maybe on some one practical use case. Later, Palantir will expand to the whole department, eventually to the whole company. So in my projection, I expect that this average for the clients will roughly double by 2030. So to approximately 9.4 million per client, right? Compared to at the moment is 5.7. By the end of 2030, it's going to be 9.4 million per client. Some might call that outrageous, some might call it conservative, but hey, you can run your own numbers and you should. And as the next piece of the puzzle, we need to know exactly how many clients they are going to have by 2030. And this year, in 2023, Palantir ended Q1 with 391 clients and added 30 clients in Q2. So that's roughly 120 clients annualized. And it has also 38% year-over-year growth, so pretty nice numbers. And let's be, again, a little bit more conservative. Let's assume that Palantir will add just 20% more client compared to last year, right? So when Palantir has basically that fixed amount of clients and they will add, let's say, 120 this year, I'm counting that the year after they will add 144 new clients, 173 clients. So it's not like a truly kind of the exponential growth. It's just adding to that additional number. So at the end of this sequence, Palantir might end up just a bit of shy of 2,000 clients by 2030, right? Again, trying to be somewhat within the reasonable bounds. Let's continue. And that means if we put how many clients and how much each client pays to the Palantir, that's where we figure out roughly their revenue, right? So 2,000 clients, each paying around 2.4 million. That's around 18 billion in revenue every freaking year. And okay, sweet, we have the revenue, but how much can trickle down to the bottom line, right? Dear, as investor, we want to see those profits, right? That can, in the end, go back to, reinvest it into the business. We can pay dividends, we can do buybacks, we can do plenty of stuff, but we need to see some of the profits, right? We want our companies to become money printing machines. So, with a steady 82% gross profit margin, we end up with a gross profit of about 15 billion, right? Palantir, contrary to some of the bears, it's not a consultancy, it's a mostly software company. Obviously, there is always some back and forth that needs to go between the client and the Palantir. But these margins are basically proving that this is, very nice software business. The margins are steady. So that will continue for the foreseeable future. Now, maybe a little bit of a wild card are the operating expenses. And what I was actually super surprised when I realized that is that the operating expenses were basically flat, excluding, some of the DPO kind of adjustments and everything. But so, it's crazy that Palantir can basically, have the OPEX flat. This is so impressive, right? That's where the companies became juggernauts. When you keep the OPEX flat or just like slightly rising, but you keep growing your revenue exponentially. Because that delta, that's all straight profit. But let's just be, again, somewhat, I hope, conservative. But let's assume that the OPEX roughly doubles from here. At the moment, it's somewhere around 1.7 billion. And let's say by 2030, it's going to be 3.5 billion. Okay. And that leaves us with around 11 billion of net income, profit. So that translates to roughly $4.5 earnings per share. Okay, that's quite a number. And at a somewhat conservative 30p ratio that I expect as a minimum the market might assign to companies such as Palantir. For example, Microsoft at the moment has around 33p now, so it's again somewhat within the reasonable realm. And with those numbers, we end with Palantir $137 per share. Okay, that means from at the moment Palantir is oscillating somewhere between 15 today, might be a little bit higher tomorrow, 16, 17, might be a little bit lower, 14, 13. But from this 17 to 137 per share in 2030, that would be roughly 35% compounded annual growth rate, which means significantly outperforming the market, like significantly, right? When you invest in an index fund, you can expect somewhere between those, 6, 7, 8%, depending if you, adjust for inflation and all of these stuff. So obviously, as an investor, as individual companies, you are looking for those companies that are going to give you, 2x, 3x, 5x within, 2, 5, maybe more years. But you always want to aim for the companies that significantly outperform, right? Because, okay, even let's say, my calculation here is, let's say it's optimistic, okay, might be the case. Let's say Palantir is, quote unquote, just $50 per share by 2030. Okay, but that still means that this particular company outperform the market still with a significant margin. Oh my freaking god. Like, you don't need to do 10x 100x to be a significantly above average investor, right? You're really competing only with yourself and the market. And as long as you can do somewhere between 15% compounded, 20% compounded, if you can do that consistently for decade, 2 decades, like the results beyond your imagination. So let's see how this pans out. Let's revisit this in 70 years or, well, hopefully sooner. But yeah, let's keep monitoring Palantir because it's one of the, in my mind, greatest companies currently, paragons of the West. So thank you for being here with me, and I guess love you guys, and let's stay in touch. Take care.